2% in the midst of a brutal rate hike? I mean, that's insane. Just as in a bear market when stocks...
Guys, I need some sound effects like that. Hello, everybody, and welcome to NGB Business News, your favorite place on YouTube for daily business news commentary. And I got a pretty special one today. We've all heard of Jim Cramer, and if you haven't, he's a host on CNBC. He's on there all the time doing interviews. He used to run a hedge fund, and now he has a show called Mad Money, where he pretty much just talks about the market, maybe gives some recommendations on what people can buy, so on and so forth. Now, I have to say that a lot of times he is wrong. A lot of times he makes a lot of good points, and he also can be wrong. So do not take any of his advice, you know what I'm saying? Take it with a grain of salt is essentially what I'm saying. But he's coming out and he's actually saying something that's an unpopular opinion, so I really want to touch on it, because he's essentially saying that now may possibly be the time to buy. And as you know, we've been hearing a lot of people come out, like Elon Musk, who said that, you know, he thinks the recession isn't going to end until late this year, you know, possibly even into next year and everything like that. And a lot of people have really been, you know, dissuaded from, you know, investing into the stock market at this period of time. So somebody coming out and saying, hey, you know, maybe you should be buying is something interesting and something that I think we should all look into and see why he feels this way. So like, comment, subscribe, all of that to help the channel grow. I appreciate all the love you guys show the channel. I could not ask for any more. But I'm not going to hold you up, so let's go ahead and get into the video.
And I think we are. You have to prepare yourself. Not for days like today where the Dow gained 369 points, S&P jumped 1.46%, and the Nasdaq pulled out 1.67%.
House of pleasure.
But for days like yesterday,
House of pain.
when the averages look like they're rolling over, the bears are screaming about the sky falling, and everybody's bracing themselves for a real roundhouse. We have to prepare for the down days now, because in a bull market, they're buying opportunities. They're how you get a better price on the merch, or merchandise, as they say on the trading desk. The problem is, it's hard to think that way when the market looks ugly. We're used to buying the dips and so-called selling the rips, and those days may very well be over, replaced by actual investing. We were in a bear market for roughly a year. And before that, we had a market that was somewhat pernicious, too. It was dominated by a handful of mega-cap tech names, and that was for ages. Narrow, unwieldy.
He does make a good point here. We are kind of possibly have to switch up the game a little bit. You know, like right now, energy is one of the sectors that is doing the best. But really the last like 10, 15 years and everything, it's just been tech. If you invest in tech, you're going to be good when the year's up. You're going to be making your profits, and you're probably going to be beating out, you know, Nasdaq, S&P 500. And it seems like what he's saying is we may have to go away from that kind of buying the dip, you know what I'm saying, selling the top, you know, type of mentality, as a lot of these industries are changing, and we're seeing tech stocks are the ones that are end up getting hit the hardest nowadays. So I think he is kind of saying like, hey, it's about time for us to start thinking differently, possibly re-strategize a little bit if we want to be, you know, profitable. I think that's interesting and a good point that possibly could be made.
And in many ways dangerous for most of the S&P 500. The mega caps carried everything on their back like giant steam trunks filled with stocks.
Okay.
So I think many of us have forgotten what a real bull market looks like, or they never seen it at all. You know what it looks like? It looks like today. When we see the signs of a real bull, you need to change your approach to down days like yesterday. In a bull market, they're just like the days when Jimmy Chill is in his garden deadheading, clipping the dying branches of stems, making sure there's
he's funny. You can see why he'd be on national TV.
Day, which meant it was the perfect time to buy the high-quality stocks that were put on sale by Wall Street's hedge trimmers. And why not? They'll grow faster, stronger, and better, just like my plants. I hope. What makes me so hopeful about this market? Well, first, there has to be a reason to be positive. It can't just be made up. It can't be chimerical.
Okay, that's what we're here for.
This time, we don't only have not one reason. We got two reasons. And they're dating back to October, so they're seasoned of last year. First was the unexpected decline in the dollar, and then the equally unexpected decline in long-term interest rates. We keep finding out that these two trends have much more staying power than we ever thought. No matter what the Fed does or doesn't do, or says or doesn't tomorrow even, I think that it will not impact long rates, just short rates. Long rates remain extremely low, which is important. Remember, that's also good compared to stocks and dividends. More on that later. As for the dollar,
Okay, so essentially what he's talking about here with the Fed and everything is he's saying even though they are, raking up interest rates and everything like that, as you guys know, since the dollar is weak, the Federal Reserve is coming in and they're essentially pulling money out of the economy, you know what I'm saying, to rake up these interest rates and kind of get that inflation under control and everything like that. But it seems that what he's saying is even though they're doing this is all short term, and what he's saying is long-term interest rates still are pretty stable. They're still pretty grounded and everything like that. So if you're thinking of not a trader, but you're thinking of an investor, somebody who's going to be, investing into something for 10, 20, 30 years, then you may still be good to go ahead and make your trades because these interest rates are more so applied to for the next 6 months, 12 months. They're not applied to the next 5, 10, 15 years.
You get a strong currency if your economy's strong. And it's relatively strong versus others. Well, guess what? When you see the Eurozone having better growth than we do, as we saw this very morning, there's still plenty of room for the greenback to go lower. Right now, the fourth quarter earnings we're seeing are so distorted by the previously strong dollar that you think our international companies must be losing tons of business to their foreign competitors. That's what a strong currency will do to you. It gives a British outfit like Unilever a huge advantage over, say, Procter & Gamble, which, by the way, we like for the Charitable Trust. But the dollar hasn't been insanely strong since October. It's now way down, which is a huge positive for American businesses that operate overseas, and I'm making the claim that it's not done going there. Meanwhile, we've recognized these two powerful trends for months, but during this time, you've been hurt severely if you listen to the bears, who constantly grab the mic and warn that it's dangerous to buy stocks because the Fed wants a recession, and they'll tell you they told you so on a day like yesterday. I got my boys like, oh, look at this, they told me so. Oh, wow, scary. The rally since October has been all about the soft landing scenario playing out. It just gets broader and broader, where the Fed can beat inflation without destroying the economy, even as the myriad critics come on air and tell you the world's ending. These guys come on air and tell you that the economy's too hot and we're permanently stuck with high inflation. Or they say the Fed's going to napalm the entire economy, maintain price stability. They have been and probably will be just distractions at this point. They take your eye off the ball. Which leads me to my second observation of this market. A real bull produces a crazy pastiche, if not an amalgam, of stocks going higher. Not just the same old, okay? What do I mean? Okay, housing stocks are the most sensitive to rate hikes of all sectors. They should be being clobbered daily, taking endless amounts of pain. But today, Pulte, giant home builder, reported this maker of mid-six-figure houses delivered a perfect quarter, allowing stock to soar 9%. 9% in the midst of a brutal rate hike? I mean, that's insane. Just as in a bear market when stocks...
Guys, I need some sound effects like that.
Bull markets accept anomalies and exploit them. Think about it. The Fed's raising rates to cool down the economy, in part because it's worried about the sky-high price of housing. So personally, I'm praying Jay Powell didn't listen to the Pulte conference call. CEO Ryan Marshall kicked it off by saying, and I quote, "We ended 2022 on a high note as we closed almost 8,900 homes and delivered all-time fourth quarter records," end quote. Well, that's not what the Fed wants to hear. Now, Pulte did see net new orders down 27%.
That's true, because think about it, guys. The Fed is trying to slow down the economy. So the Fed is trying to raise interest rates so less people are loaning out, which means less people will get loans for cars, less people will get loans for houses. Businesses will invest less into, let's say, new facilities, new things like that, because the interest rates are going to be much higher. You would rather wait for the interest rates to go down, you know what I'm saying, before you make a purchase. Think about if you're buying a house right now, you would rather have lower interest rates. So if you know they're high at that moment, you may say, hey, I'm gonna wait 6 months, I'm gonna wait a few years before I buy a house, possibly now, to see if I can get a better interest rate. So with, like he's saying, with this Pulte group or whatever coming out and saying, hey, we sold, or we were able to sell 90,000 houses or something last year, then that's kind of making the Fed be like, this isn't exactly what we want, because what we're trying to do is slow down the economy. So why is everything going so well or so fast for you?
Year over year, Marshall noted, quote, "The softer demand is a result of consumers priced out of the market by higher prices and higher mortgage rates, along with those individuals who have moved to the sidelines given market uncertainties and risks." That's one for the Fed in its war against inflation. Oh no, but go one page into Pulte's slide deck and you will see how confusingly bullish this moment is, because the company actually raised housing prices by 17%, all the way to 571,000 on average. Are these numbers a sign of America's great wealth, or are they telling us that when long rates leveled off at the end of last year, buyers started coming back to the housing market? Now, in a bear market, we'd be dissecting these numbers and saying they're frauds or they're crazy. Who knows? But the negative interpretations, they don't cut it now. In a bull market, you know what you do? Well, you do nothing. You know, the one thing you certainly don't do is look through it. I'll tell you what you do. You buy. Remember, in bull markets, all sorts of stocks lead us higher, including ones that sometimes erupt higher for absolutely no discernible reason whatsoever. I mean, why the heck did the retailers start running today? I got no idea. That's bull market behavior. But it says, why is Target up? I don't know. That's bull market behavior. Then there are the autos. Okay.
I think we can say kind of why we know like something like Target could be up and everything. We are in we're in a recession. And, when you're in a recession, things like consumer staples normally do the best. Consumer staples, your toilet paper, you know what I'm saying? Things like cigarettes, things like eggs. You know what I'm saying? This isn't why eggs went up. Eggs went up because there's a chicken disease, if you guys didn't know. But, it makes sense why Target could be going up during this time because, like I said, it doesn't matter if you're in a recession or not, you're still going to need toilet paper. You're still going to need to brush your teeth. You're still going to need toothpaste. You're still going to need all of these. So a lot of times grocery stores and things like that are able to kind of withstand this because this is places where people are going to have to put their money regardless of what the state of the economy is. Whereas something like let's say a technology, let's say you sell PlayStations or something like that. People may be like, all right, we're in a recession. Maybe now isn't the time for me to buy a PlayStation because that's something I don't necessarily need. While consumer staples are always going to be something that you need regardless of the economy. And you're not going to be able to cut back on it. Like you're going to use the bathroom just as much. It's not like, oh no, I'm going to go to the bathroom a little bit less to save toilet paper. Like, no, when you got to go, you got to go.
Which should also be crushed and just mutilated, spindled here. 1 week after Tesla cuts prices to smash its competitors, GM comes out swinging with amazing numbers, fantastic forecasts, plenty of demand for its electric vehicles. Later tonight, CEO Mary Barra will explain how it all came together. But the fact is, it's not supposed to come together at this point in the tightening cycle. It's supposed to be upside down. Can we flip this? Can we flip this and show people what it's been like? The pain, the misery? The managed care stocks exploded higher, too. Look at United Health. The semis reignited after a tepid day yesterday. Who doesn't want to see a boring company put up great numbers like A.O. Smith, a solid maker of boilers? Here comes Carrier. Here comes Train. That's what happens, okay, at this stage. That's what you want to be looking for. Let me give you another telltale sign of the bull market. Reversals. Intraday reversals. Get ready for them. Look at what happened to NXP Semi. That's the automaker. That they make chips for autos and the Internet of Things, IoT. Last night, NXP reported and some ill-advised traders dumped the stock when management said things are weak.
It's very interesting, too, when you see a semiconductor. As you know, semiconductors are essentially the chips that go into a lot of things, the chips that go into Teslas, your laptops, your computers, that type of thing. And lately it's been really hard to get semiconductors because, the C-19 pandemic, it's been hard to, get them from wherever they come from, whether that be in Asia or, Silicon Valley or anything like that. But there just haven't been enough of them. And this is why the prices of technology have really raised. But with semiconductors being hit so hard by this, it is very interesting to see semiconductors, popping up and starting to make some profits and get rolling again. That's kind of saying, that they're getting back rolling on supply. They're able to get some more of these chips out here than they were able to get before. So, that is a little interesting, and I do see why that could lead somebody to believe that it's possibly a bull market when an industry that wasn't even able to get out its products is somehow able to increase in value on the stock market.
That sent the stock down $7 in after hours. There was no conference call until today. But when NXP finally spoke, it sounded pretty soothing, and the stock actually rallied back from -7 to finish up nearly $5. 12-point swing. Just tonight, AMD, the new semi-kingpin, missed on gross margins, very beaten down earnings estimates have been slash. What happens? Bear market loses 10%. And this market adds to its gains. This is the kind of bull market behavior you have to get used to. UPS reports this morning at 6 a.m. Computer-generated stories tell you how horrible it is. Big miss. Wowza. Stock looks down 4. Plug ugly. End of the day, stock's up 8. Finishes 12-point swing. Not bad. Bear market goes the opposite way. Stocks open up, then get clobbered, feel humiliated. Good earnings mean nothing except price target cuts. Hedge funds come in on down days and tell you, here it comes, the big one, the mother of all bears. And all that happens is that they get that one day. So bottom line, let's understand that these days, say, like a Caterpillar reports a solid number and the stock sells off, even if it doesn't reverse today, well, then there's always tomorrow. So I don't think of betting against it. Not with billions in infrastructure sales coming their way. A sale down 9 used to be a correct one when we were in Bear Town. Not anymore. Hey, let's go to Amber in New York. Amber!
Hey, Jimmy Chill, this is Amir from New York.
All right, the showman, and what do you have to say?
Yep. So, Mr. Chill, I watch your show with my baby son. He loves your show along with me. We both enjoy it. And
that baby is going to be on point. He's going to be ready. Get your kids in the market early. You know what I'm saying? Get them in the market early. Get them thinking about what's going on. Like, oh, little Jimmy, you want a PlayStation 5? What's going on with Sony? What's going on with Sony, Jimmy? You know what I'm saying? I mean, he said he watches it with his baby, but hey, never too early to get in the market. Go ahead and put them on NGB Business News. You know what I'm saying? Just let it play. Just let it play. They'll be all right. I'll take good care of them.
Would like to get from the sound machine that you have. It would be great if you can add it on the CNBC merchandise store sometime for sale.
I like that. Okay. How about a stock?
Awesome. So I would like to know from you if I should buy, hold, or sell this stock. My investment horizon is 5 to 10 years. It's a digital healthcare company. It's came down a lot in the last 1 year or so. I know you've spoken about it in the past, but I'm wondering what you think about it from a long-term future perspective. They have a wide moat because they're integrated with a lot of healthcare insurance companies.
Okay.
They have a lot of doctors on the platform.
And the stock is?
Teladoc, something you tweeted about last night.
Oh, Teladoc. Okay, so like Kathy Wood loves it, so that right now in this market, that means it goes higher. I mean, it doesn't matter how the company's doing. She likes it. People will see it. They'll cover their shorts. They'll get worried. It'll go higher. Let's talk about it after it goes higher. Thank you for the kind words. All right, I think many of us have forgotten what a real bull market looks like, or they've never seen one. You know what it looks like? Today. Made money tonight. GM shot the lights out in the quarter and got this new lithium investment to record EV sales. To record EV sales. I got to tell you, you have to watch my interview with Mary Barra. Brilliant.
All right, so guys, maybe check out that interview, but he definitely made a lot of good points here about, interest rates and everything like that, and how, normally you'll see a different kind of trend. If there's a bear market, normally you'll see stocks kind of try to pop up at the beginning of the day with everyone being like, oh, well, this is low, let me buy into it, and then it ends up getting crushed throughout the day, as a result of the correlation of so many other stocks around it and in its industry also getting crushed, causing people to feel uncomfortable and pull out their money. So he made a really good, interesting point. Is this me saying that, hey guys, we should start buying? Like he says, buy. He's got a button that says that. I'm not necessarily saying that, but it is an interesting perspective for us to look at. Obviously we're only looking at a few stocks here. We're only looking at a few days and everything like that. But it is important for us to think, like, if we do want to capitalize on this market, if we do want to be able to capitalize in this recession, then at a certain point, we're going to have to pull the trigger, guys. And at a certain point, we're going to have to stop being scared, and we're going to have to start actually making investments, long-term investments that we can hold for 20 to 30 years. Now, right now, it seems like everyone is at this point where we're all kind of sitting on our hands and we're wondering, how long is this recession going to go on? Like, where is the bottom? Like, where should I really start buying? And that's just one thing that we're all going to have to try to figure out, together. And that's kind of why this channel exists, in fullness. It exists so we can see over the course of weeks, months, okay, the market's doing this, the market sentiment is being like this. Now, I think you may see last month, it may be all videos about how the market is taking hits, how companies are doing bad. Whereas the next month you may see, oh, wow, there's a lot of videos coming out that are positive for the market and everything like that. That can show us market sentiment. That can let us possibly be able to see a reversal when we're talking about these different points every single day. So let me know what you guys think about the state of the market right now. Do you guys think it's the time to buy, or it's better to kind of hold on your hands right now? Do you guys think think that Jim Cramer makes a lot of sense, or do you guys think, kind of like the Wall Street bet guys, that Jim Cramer is a grifter and completely useless and he needs to be removed from the internet? So I just want to know what you guys think about that. Also, like, comment, subscribe. I appreciate all the love you guys have been showing me. I could not ask for any more from you. So you guys all have a great day, and if you're making some investments, let me know what's going on.